Well, we were watching live as RBI Governor Shaktikanta announced the monetary policy decision. He reiterated the importance of the policy and spoke about the price stability as it was important for every sector of the economy. He said the monetary policy is important because it affects lives of people, economy, big corporates, middle class and the farmers. He also reflected upon the eventful journey of 2024 as we stand at the threshold of 2025. He also said that central banks were put to test amid geopolitical tensions, financial market volatility over the last year. For now, he said that it has been decided to keep the repo rate unchanged. MPC decided by a majority of 4:2 to keep the repo rate unchanged at 6.5%. And RBI MPC also kept policy stance unchanged at neutral. RBI Governor said that MPC took note of the recent slowdown in the momentum, which translates into a downward revision in the growth forecast for the current year. And he marked that food inflation pressures are likely to linger in Q3 of the current financial year and start easing only from the Q4 of the current financial year. He said that MPC believes that only with durable price stability can strong foundations be secured for high growth. He said that India's growth in real GDP in the second quarter of this year, that's 5.4%, turned out to be much lower than anticipated, and industrial activity expected to normalize from the lows of the previous quarter. He also said that mining, electricity also expected to normalize from post-monsoon, and services sector was also continuing to grow at swing pace. He said that investment activity and government consumptions are also expected to improve. RBI Governor also said GDP growth for financial year 25 was projected now at 6.6% with Q3 at 6.8%. He also said manufacturing and service firms point to firming up of input costs. CPI for financial year 25 projected at 4.8% against 4.5% projected earlier. And he said that price stability was essential for sustained growth. Governor Das said system liquidity continued to remain in surplus in October and November, which may tighten in coming months due to cash flow. And thus, it has been decided to reduce the CRR for all banks to 4%. RBI has also cut the CRR by 50 basis points. The Reserve Bank's exchange rate policy has remained consistent over the years and it is market determined. He also said that the health of the financial sector is at its best in a long time and gap between credit and deposits has narrowed and India's external sector has remained resilient. Well, Governor Das also said that as part of Reserve Bank's consultative approach in framing regulations, a new program, namely Connect to Regulate, will be launched under the ongoing RBI at 90 commemorative events, and also introduction of podcast facility, most importantly as a new means of communication was done, and the financial sector landscape is witnessing rapid transformation enabled by technologies such as AI, tokenization, cloud computing. Governor Das concluded that prudence, practicality and timing of decisions become even more critical, and he said our endeavour in the Reserve Bank has always been to implement timely and carefully calibrated measures to derive the maximum impact.